I think you'd have to acknowledge, right, and maybe we've talked about this before, there's massive upward momentum in Tesla shares, regardless of all the fundamentals we're talking about. What do you think would reverse that here?
Good afternoon, Kelly, and thanks for having me on. Look, I think it's very difficult to know, but what investors appear to be reacting to this quarter is that there's continued uncertainty and that it's unclear that margins have bottomed. They declined again sequentially. And I think investors want more clarity. They want more clarity on the Cybertruck, but particularly they want more clarity on when margins may stabilize. And I think it could be tough for the stock for the next several quarters because I do think there's a chance or a likelihood that Tesla will continue to need to lower price to drive the kind of growth that it wants. And along with that price, those price declines, we'll see pressure on margins.
I thought it was interesting that Musk said, when interest rates go up, prices have to come down because it's not apples to apples, but we're obviously not seeing that so much in the housing market. Is this a case of, Tesla's cutting prices because interest rates and macro, or are they cutting prices because EV oversupply and not enough consumer demand?
I think it's more the fact that Tesla has only two products addressing only a small part of the market today. And there's really a limit to how many of those vehicles Tesla can sell. So right now they're selling more than 1 million units a year in the Model Y, and they're selling more than 500,000 units a year in the Model 3. Those are extraordinary numbers for any car. There are only two cars in the world that sell more than 1 million units. So Tesla's doing fantastically. The issue is they want to keep growing another 25, 30%, but they only have these two units, and they're likely reaching, and they appear to be reaching their saturation levels in terms of the number of consumers who want them. So they either need to lower price or come out with new models. And the new models are a little ways off. The Cybertruck is coming out later this year, but it'll be low volume next year. And the next high volume cars are likely only coming out in 2025. So if you're Tesla and you want to continue to grow and you have this relatively limited product lineup, your lever is price, and that's what they're using.
Why do you think they didn't have more to say about Cybertruck in the call last night?
Look, Tesla's planning some kind of formal announcement likely at the end of September or October. And so they like to sort of do an unveiling and a reveal then. I don't think they wanted to front run. I'm not sure they have a good sense on what availability will be. And also, I think pricing is going to be quite expensive. And so they want to tell the whole story, the capabilities of the vehicle and the initial price all at one time.
Fair enough. Finally, so if I'm looking at the right number, 18.1%, I think was automotive X incentives or whatever it's called. Where do you think that number is going to be 12 months, maybe 24 months from now?
Look, I think it depends on how quickly Tesla wants to grow. So certainly we think there's a chance that those numbers continue to go down. It depends on how quickly they can bring down their own costs, but also how quickly they'll need to lower price to drive volume. So we're modeling margins kind of flat to slightly down in the near term. And then it's really up to Tesla next year. They're going to do about 1.8 million units this year. If they want to grow to 2.4, we think they'll have to cut price and margins will go down. If they're content growing and only maybe selling 2 million units next year, then I think the margins can be flat to up.
And either way, your price target is?
$150 a share.
All right, from $265. Toni, thank you for your time today. We appreciate it.